Well, let's get across the market open now. Kyle Rodder joining us from capital.com. Kyle joining us from London. Welcome to you. So, not a lot of news, particularly out of the Middle East overnight. Mind you, oil prices did fall substantially.
Yes, and the big move yesterday, or at least in the oil front, was really that reportage coming out of Iran itself that perhaps it had tabled the idea with the United States that it could reopen the Strait of Hormuz within the next 30 days or so, and that we could see a fairly rapid normalization of energy markets, assuming a deal goes ahead, which basically market participants are pricing in as we speak. But for the most part, when it comes to the equity complex, really we're just waiting for that sort of better news to come through, that sort of new news, so to speak, to come through. And there really wasn't that much movement at all when it comes to Wall Street. But the market is still at record highs. The market's still betting effectively that we will see a peace deal and agreement materialize fairly soon. And really, there's still that high degree of optimism, sort of being baked into equity prices right now.
So, Kyle, on Wall Street, we did see more records overnight, particularly from the Dow, but also the S&P and the Nasdaq. Although investors taking a bit of breather from that tech trade.
Yeah, more or less. I mean, I think we saw that kind of drop in oil, and that did improve, I suppose, the case for sort of cyclicality, if you wish to call it that. So the Dow was up. You saw some of those, more cyclical names perform okay last night. Really, there was the breather in the tech sector, a slight pullback in the Nasdaq for the most part, but it was a very modest rotation throughout the session. Again, really driven by that kind of dip in oil prices, and again the sort of subsequent benefit that has to some of those names that are economically sensitive. But if you really sort of peel back everything here that we're seeing at the moment, and look at it, what's driven Wall Street's record highs, the dynamic right now is that the markets are basically placing their bets that there will be a peace deal between the US and Iran fairly imminently. It's one fairly big assumption. But with that assumption made, really focusing on what has been this kind of extraordinary earnings growth going forward or expected to be the case for a lot of these sort of magnificent seven names in particular. And this kind of notion that these companies are going to continue to basically just print profits and underpin this kind of rally. So there was, a very much kind of, again, rotation last night in the market. There was a little bit of a pause in that kind of tech-led rally, but ultimately what's sort of supporting this, record high on Wall Street at the moment is the prospect of really strong earnings growth, and it's coming from those tech names, which, continue to, ultimately keep Wall Street around record highs.
What's the next data point the market's going to be watching for?
It's this inflation figure in the next, say 24 hours or thereabouts, and what it says about the underlying inflation impulse in the United States. Headline inflation is expected to come down according to the PCE index, but the core number is expected to edge up to about 3.3%. Not a obviously catastrophic number by any means, but there is this sort of persistent fear, of course, that yes, we've got this energy shock potentially driving prices higher in the United States. But underneath that, there's a very strong underlying inflationary impulse, partly due to still very expansionary fiscal settings in the United States, that has to be said, but also increasingly this kind of investment boom that's driving a very, very significant competition for resources within the US economy, within the global economy, this kind of building scarcity and therefore sort of supply constraints in the US economy that's going to keep inflation certainly above target. And increasingly, it looks like it, moving away from target. So this number, again, the core number is expected to be about 3.3%. Could be, really quite crucial for the markets. This kind of almost paradox when it comes to the AI trade at the moment is that the more profits these companies make, the more that they're able to monetize artificial intelligence, the greater desire for compute capacity, the greater stress on resources throughout the economy, and therefore sort of stronger inflationary pressures. And therefore, there might be this kind of risk anyway that the upside in the market is curbed a little bit by rising interest rate hike expectations driven by all of that. And at the moment, we do have the markets pricing in a basically better than 50-50 chance the Fed will be needing to hike interest rates by the end of the year. So this inflation data will be really illustrative just in terms of again, the underlying inflation impulse in the US economy, and to what extent will, the Fed have to move, I guess, move away the proverbial punch bowl from the markets, considering that, again, this sort of AI theme is something that's, not only driving profitability, but also driving, a stronger inflationary impulse throughout the US economy and once more throughout, parts of the global economy.
Yeah, that was reinforced by comments from Minneapolis Fed Press Neil Kashkari overnight. Kyle, when we take a look at the Asian session, what should we expect?
Well, we're looking at a slightly mixed lead, but the focus will really be on some of those sectors that, one, are sensitive to the oil price, and of course, we have seen this kind of extraordinary move in the Kospi again. We've seen these extraordinary moves in the Nikkei over the last week or so as oil prices have plummeted. Yeah, but also those kind of pockets of the market also happens to be the Kospi and other areas of Asia too, which remain sensitive to the global tech trade, the kind of global AI theme, and to what extent we can start to see a little bit of follow through throughout the session, in those trades more or less. There isn't that much on the docket when it comes to event risk throughout the session, so it really is this kind of positioning around this sort of PCE data that offers the real inflection point, for the market. But really, we're waiting moment by moment, it has to be said, for any kind of headline that comes through about a deal between the US and Iran. The story last night, at least when it comes to equities on Wall Street, was ultimately this kind of pause that investors took as they sort of wait for a tangible breakthrough. So if that comes through in the session, that's going to be that kind of driver of risk appetite with throughout the sort of Asian region. If that doesn't materialize, maybe we start to see some of those doubts creeping back into the market again about whether we've sort of been fooled again, I suppose, and duped by headlines about the kind of prospects of a deal. But that'll be the real sort of swing factor in terms of intraday volatility. Other than that, it's very much going to be positioning for this very crucial inflation data out of the States tonight.